Hey guys, welcome to CA Deep Learning. Now we are going to see consolidation chapter AS21 practical question number 9. Okay, let's proceed to question. A Limited acquired 1600 ordinary shares of 100 rupees each of B Limited on 1st July 2021. On 1st July 2021, the date is acquisition date of acquisition. On 31st December 2021, the balance sheet of the two company were as given below. Okay, this is balance sheet of 31st December 2021, which means this is consolidation date because balance sheet on 31st December, so consolidation date. So 31st December 2021 is consolidation date, which means this is calendar year, Jan to 31st December. Calendar year, this is not financial year, it's a calendar year. So the sum contains the date, and we need to take prepare a consolidation balance sheet as at 31st December 2021, which means we need to prepare consolidation balance sheet on the base of calendar year Jan to December. Okay, now we go to adjustment. The P&L account of B Limited showed credit balance of 30,000 on 1st January 2021, year beginning 30,000. Okay, which means pre-reserves, out of which dividend of 10% was paid on 1st August 2021. On 1st August, dividend paid out of pre-reserves. So this is pre-acquisition dividend. Okay, A Limited credited the dividend received to its P&L account. A Limited wrongly credited to P&L account because pre-acquisition dividend should be credited to cost of investment. So this is wrongly credited. A Limited wrongly credited to P&L account. So we need to pass rectification entry also. Okay, the P&M which stood at 1,50,000, plant and machinery stood at 1,50,000 on 1st January 2021, was considered as worth 1,80,000 on 1st July 2021. On opening balance, plant and machinery 1,50,000. On the date of acquisition, revalued at 1,80,000. Okay, let's see. This figure is to be considered while consolidating the balance sheets. Okay, the rate of depreciation of plant and machinery is 10%. Rate of depreciation they have given. Okay, prepare consolidation balance sheet. Okay, let's proceed to solution. First point is to identify date of acquisition and date of consolidation. Date of acquisition is 1/7/2021. Date of consolidation is 31/12/2021. Okay, holding percentage 80%, minority percentage 20%. How A Limited acquired 1600 shares out of 2000 shares. So 1600 divided by 2000 will be 80%. Okay. Third point, analysis of reserves and surplus into pre and post acquisition. We need to analyze which are pre, which are post. Okay. If we see the reserves of in question, reserves of subsidiary company in question, there are general reserve, P&L. Both two reserves are there. Okay. General reserve, we don't know that is pre or post. In question also they did not mention general reserve is a pre or post. So we need to take at general reserve as pre, 1 lakh as pre acquisition reserves. Okay, see my solution. General reserve 1 lakh, and we need to identify P&L into post or pre and revaluation reserve. Okay, we come to P&L. Like P&L is 82,000. We need to divide into pre and post. In question they have mentioned that P&L showed a credit balance of 30,000 on 1st January 2021. Okay, which means pre-reserves, pre-P&L is 30,000, out of which 20,000 pre-acquisition dividend is paid. Dividend 10%, so share capital is 2 lakh. 2 lakh into 10% 20,000. So pre-acquisition dividend is 20,000. So we will get 10,000 P&L pre-acquisition. Okay, and still there are 52,000 is there. We don't know that is pre or post. Let's go to that. And in question they have told that A Limited credited the dividend received to the P&L account. Wrong entry. A Limited wrongly credited P&L account for dividend received. Because pre-acquisition dividend will be credited to cost of investment, they have wrongly credited to P&L. So in P&L account we need to add back that 20,000. So we need to add back 52,000 plus 20,000 rectification entry. So P&L will be 72,000 after pre-acquisition. 72,000 P&L is for whole year. So we split into two, 6 months, 6 months. This 6 months is before acquisition, Jan to June. This 6 months is July to December after acquisition. Before acquisition is pre, after acquisition is post. In post, we need to deduct correct depreciation after revaluation, and we need to add back wrong depreciation before revaluation. We would have already accounted before revaluation depreciation. How much? 1,50,000 into 10% into 6 divided by 12. These are post acquisition, so 6 divided by 12 off year. We would have get 7,500. But this is wrong. We need to give depreciation after revaluation. So the amount of PPE is, balance of PPE is 1,80,000 into we need to provide depreciation 10% into 6 by 12. The amount will be 9,000. These 9,000 depreciation we need to deduct and add back 7,500 wrong depreciation, and we could have arrived 34,500. This is post P&L. For pre P&L, already 10,000 is there. Add 36,000. So P&L pre-acquisition 46,000, post acquisition 34,500. Let's see revaluation reserve. On opening balance of PPE, the amount is 1,50,000. On the date of acquisition, the PPE amount 1,50,000 revalued into 1,80,000, right? Yes. Then before acquisition date, there will be some months where depreciation should be provided. So there is 6 months from January to June. So we need to provide depreciation for that 6 months. Okay, depreciation for 6 months, 1,50,000 into 10% into 6 by 12. We will get 7,500. Like before revaluation, the amount of book value of the PP is 1,42,500. After revaluation, 1,80,000. So the appreciation amount is evaluation before PPE. After evaluation, we need to deduct. We will get 37,500. This is revaluation reserve. We found the general reserve, P&L pre-acquisition, P&L post-acquisition, and revaluation reserve. Next step is apportionment of share capital post and pre into holding and minority interest. Okay, let's first start share capital. Share capital total is 2 lakh. We need to divide holding minority interest 80%, 20%. Next, pre-acquisition resource. We already found that pre-acquisition resource 1,83,500, 34,500. We need to segregate into holding and minority interest, pre-acquisition and post-acquisition. Here, minority interest we need to take total 40,000 plus 36,700 plus 6,900. We will get minority interest 83,600. Refer fourth point. This is okay. And after computing minority interest, we need to compute cost of control like goodwill or capital reserve. Okay. What is the formula of cost of control? Net asset on the date of acquisition minus cost of investment. Okay. Net asset on the date of acquisition. See fourth point, 1.6 lakh plus pre-acquisition reserve, because on the date of acquisition, so there will not be post-acquisition. So take share capital plus pre-acquisition reserve. Share capital plus reserve surplus equal to net asset. So 1.6 lakh plus 1,46,800. If we put, we will get 3,06,800. Okay. Cost of investment in question they have given 3,40,000 in notes to accounts. And there is a pre-acquisition dividend. We all know that pre-acquisition dividend is 10%, so the amount is 20,000. 20,000 we will take 20,000 into 80% because holding company share. So we will get 16,000. We need to minus the pre-acquisition dividend into cost of investment. So we will get cost of investment 3,24,000. If we minus A minus B, we will get goodwill 17,200. How goodwill? Because cost of investment is more than net asset, so goodwill. After that, we need to compute consolidated reserves and surplus. In balance sheet, there will be reserves and surplus, so we need to compute that. First is reserves and surplus of holding company. Holding company reserves and surplus. Directly you can take it from balance sheet and add it. And next is reserves and surplus of B Limited on holding percentage. In fourth point, in post acquisition reserves, holding 27,600. Take that and put it in sixth point, consolidated reserves and surplus. Okay. Because of wrongly created dividend, the reserves and surplus of subsidiary company will be increased. So we need to deduct that. So minus rectification for wrongly created dividend, 16,000. If we do so, we will get consolidated reserves and surplus. That's all. In balance sheet, PPA account of A Limited and PPA account of B Limited should be added, right? And PPA account of B Limited, on the date of acquisition, the revalued amount is 1,80,000. After that, we need to provide depreciation for 6 months. Before revaluation, we already provided. After that, we need to provide 6 month depreciation. So 1,80,000 into 6/12 into 10%, we will get 9,000. If we reduce that, we will get 1,71,000.